Hi, this is Jerry. Until recently, when companies thought of AI infrastructure, the name that popped up most readily was Nvidia. Its high-performance graphics processing units, GPUs, have powered almost the entire surge in machine learning, deep learning, and large language model, LLM, training worldwide. But now, Google, long known for its software, cloud services, and AI research, is accelerating its push to challenge Nvidia's dominance. Its TPUs, once used exclusively in Google's own data centers or rented via Google Cloud, are being repositioned as an alternative AI compute architecture for external customers. As a result, we are witnessing the opening of what may become a major chip war, not only in manufacturing and design, but also in ecosystem lock-in, cost, scalability, and ultimately, which architectures power the next generation of AI services. A brief refresher. TPUs are application-specific integrated circuits built by Google to accelerate the tensor and matrix computations used in neural networks. Unlike GPUs, originally designed for graphics, then repurposed for AI, TPUs are purpose-built for machine learning workloads, giving them distinct advantages in efficiency, speed per watt, and cost for large-scale AI jobs. The latest generation TPU, for example Google's 7th generation Ironwood Trillium TPU, reportedly delivers massive performance per chip. Some sources suggest that a TPU pod can scale to thousands of chips, achieving multi-exaflop compute throughput, a scale that can rival or exceed large GPU clusters for AI training or inference tasks. Beyond raw performance, TPUs bring efficiency advantages. They are optimized for the lower precision tensor math common in neural network workloads, which often yield similar model quality at a fraction of the compute and energy cost. This makes them especially attractive for cost-sensitive, large-scale deployments, such as serving LLMs, running inference for millions of users, or supporting regulatory-heavy workloads where efficiency matters. In short, TPUs give Google a scalability plus efficiency plus specialization recipe, which is often a better fit for inference-heavy workloads and increasingly competitive even for training, depending on their architecture and tooling. Why? 2025 is a turning point. Google opens TPUs to the outside world. For many years, Google's TPU strategy was internal or cloud rental. Third-party customers could only access TPUs via Google Cloud. But that dynamic is shifting fast. Recent reports indicate that Google is pitching TPUs directly to large cloud customers that want to run AI workloads in their own data centers. Most notably, Meta Platforms, one of Nvidia's largest AI chip customers, is reportedly in talks to spend billions of dollars buying or renting Google's TPUs for its data centers, starting in 2027, with rental potentially starting as early as 2026. If that deal goes through, it would mark a major shift in AI infrastructure strategy across tech giants. Meta would no longer be tightly locked into Nvidia's GPU ecosystem, but would instead rely, at least in part, on Google's specialized silicon. That alone could shift billions in chip demand and shake up Nvidia's dominance. Analysts estimate that if Google can capture even 10% of Nvidia's annual AI chip revenue, that would translate to billions of dollars in new revenue for Google and a meaningful loss for Nvidia. In the broader market, this move signals that TPUs are no longer experimental or niche. They're now positioned as a credible alternative for hyperscale-grade AI infrastructure. That has profound implications for AI developers, cloud providers, enterprises, and investors. One of the clearest impacts, cost. TPUs are optimized for AI workloads in a way that GPUs, designed originally for graphics, never were. By using lower precision arithmetic and custom tensor pipelines, TPUs can deliver comparable model performance at lower power use and better cost performance ratios. For cloud providers, that reduces infrastructure overhead, power cooling, hardware amortization. For enterprises and AI as a service vendors, that lowers the cost of running AI models, especially for inference at scale. This efficiency advantage makes TPUs attractive for large-scale AI applications, from recommendation engines to real-time translation to LLM services. As workloads scale, these savings compound, making AI more accessible and enabling new use cases that might not be economically viable with GPU-based infrastructure. Nvidia has ruled the AI chip world because its GPUs are versatile, well-supported, and have a mature software stack. But as TPUs gain traction, the risk to GPU dominance grows. A shift by a major customer like Meta could trigger others to follow just to reduce dependency, diversify supply, or lower costs. Already, markets are reacting. Reports of Meta's negotiations caused Nvidia's stock to drop in early trading, while Google shares rose. Even GPU rivals like AMD or Intel may feel pressure. But larger disruption may come from shifting demand away from general-purpose GPUs to specialized AI silicon. That could reshape the roadmap of AI hardware development. Less emphasis on generic GPU compute, more on domain-specific processors, ASICs, like TPUs or other custom designs. Ecosystem and vendor lock-in dynamics. Switching from GPU to TPU isn't just a hardware swap. It often requires changes in software, tooling, and even AI model architecture. Nvidia's ecosystem, CUDA, MPS, etc., is deeply entrenched. But Google has a potential advantage. It can bundle TPUs with its cloud, its machine learning frameworks, and its data center services. If Google pushes toolchains, SDKs, and managed services for TPUs, it could gradually build an ecosystem that rivals or even surpasses the GPU ecosystem, especially for use cases optimized for tensor math, inference, or cloud-native deployment. That increases switching cost for customers. Once integrated, changing platforms becomes costly. For enterprises, that means more power for Google, but less vendor diversity. For developers and AI labs, it offers new options, trade-offs, and possibly lower barriers to entry. As Google and other players invest heavily in TPU development, building successive generations that improve performance, memory bandwidth, and scalability, the overall pace of hardware innovation could accelerate. This matters especially as AI models get larger and require massive compute and memory capacity. TPU pods, with optimized memory bandwidth and highly parallel tensor pipelines, may become the preferred infrastructure for these next-gen models. Moreover, this could encourage the rise of more domain-specific chips beyond GPUs, designed for inference, LLM serving, edge AI, or specialized workloads like LLM customization, video generation, or real-time translation. In turn, this diversification helps the AI ecosystem, giving developers and companies more choices. It reduces reliance on a single hardware vendor, promotes competition, and could ultimately lower costs and accelerate adoption. Strategic and geopolitical implications. Because TPUs are designed and built by Google, a major global tech company, the increasing adoption of Google's chips can shift not only market dynamics, but also the balance of power in the AI supply chain. For enterprises and governments, having an alternative to Nvidia reduces concentration risk. That may influence decisions on compliance, data sovereignty, and long-term procurement. For global markets, especially in regions like Europe, the Middle East, and Asia, this could mean more competitive pricing, diversified infrastructure providers, and less dependency on one chip maker. Risks, limitations, and what could go wrong. This doesn't mean TPUs will immediately displace GPUs nationwide. Several challenges remain. Software and ecosystem maturity. The GPU stack is mature, widely supported, and deeply embedded in AI workflows. Transitioning to TPUs may require retooling, code changes, and training. For companies with large existing AI pipelines, that cost may be non-trivial. Flexibility and general-purpose use cases. GPUs remain more versatile, not just for tensor math, but also graphics, simulation, video processing, general compute. TPUs are specialized. For some use cases, GPUs will remain more appropriate. Lock-in risk. Heavy investment in TPU-optimized infrastructure could lead to vendor lock-in, reducing flexibility in platform choices and potentially raising switching costs. Adoption uncertainty. While large companies like Meta might shift, many firms may wait until TPU hardware and software prove stable, flexible, and easy to integrate, a process that could take years. Market resistance. Incumbents are not standing still. They are innovating, improving performance, and expanding their own AI hardware roadmap. GPU-based solutions will continue to evolve. Therefore, while TPUs represent a serious challenge and may drive major change, the transition will likely be gradual, heterogeneous, and dependent on use case, cost, and technical compatibility. If TPUs become widely adopted, the cost of deploying AI at scale, especially inference for user-facing applications, could drop significantly. This might democratize access to powerful AI tools, encourage more innovation, and enable AI-driven services in more diverse markets. New opportunities for cloud providers and hyperscaler. Cloud providers could increasingly differentiate themselves not just via storage or basic compute, but via custom AI accelerators. Those offering TPU-based instances might attract price-sensitive, AI-heavy workloads. This could intensify competition among cloud platforms, possibly leading to diversification beyond GPU-only offerings. Hyperscalers, in turn, may build hybrid AI infrastructures, mixing GPUs, TPUs, CPUs, and other accelerators, optimizing cost, power, and performance for different tasks. As hardware becomes more efficient and cheaper, specialized AI applications, especially those requiring real-time inference, personalization, or low latency, may flourish. Think real-time translation, voice assistants, personalized medicine, smart logistics, live video analytics, and large-scale recommendation systems. Moreover, niche players and startups, not just big tech, could more easily enter AI-driven markets because the barrier to entry, cost of compute resources, becomes lower. Google has quietly but steadily built one of the world's most powerful AI hardware stacks. With TPUs, custom AI infrastructure, and deep integration with its cloud services, it's now pushing to become a full-stack AI platform provider. That puts it in direct competition with traditional hardware vendors, Nvidia, AMD, but also with other hyperscalers and AI infrastructure companies. As the heavyweights reposition, the playing field is changing fast. For investors, the shift presents both opportunity and risk. On one hand, Google may capture a significant portion of the growing AI infrastructure spend, boosting cloud revenue and long-term valuation. On the other hand, incumbent chip makers will fight back, likely accelerating innovation and possibly fragmenting the market across different architectures. For AI developers and businesses, the evolution means more choices at the cost of ecosystem fragmentation, potential lock-in, and migration overhead. It also means that long-term tech strategy will likely involve multi-architecture approaches, hybrid deployments, and careful evaluation of cost versus flexibility versus performance. The AI boom over the past few years has been powered literally by compute. GPUs, massive data centers, and hyper-scalable infrastructure. But with Google's aggressive expansion of its TPU business, we are entering a new phase, one where specialized, optimized, efficient AI silicon competes side by side with general-purpose GPUs. If reports are accurate and companies like Meta begin deploying TPUs at scale, we may witness the beginning of a structural shift from GPU-dominated AI infrastructure to a more diversified, competitive, and efficient hardware ecosystem. The long-term winners may not be the largest chip vendors, but those who build the best ecosystems to support real-world AI deployment. In that landscape, Google is no longer just a search engine or cloud provider. It's quickly becoming one of the most influential players shaping how AI is built, deployed, and scaled worldwide. For anyone working in AI, cloud, enterprise tech, or related investment, this is more than a chip story. It's a paradigm shift.